Today I'm going to share with you the accounting cycle, how the accountant started its work from very beginning until the end of the work. This is a simplified illustration so that even you are not accountant, even you are fresher, or you just start studying accounting, you can figure out and you can somehow understand the process. So I designed this tutorial so that everybody can relate and everyone can understand and can have an interest about accounting. So this time we are going to study the company, the record of the company, Joji Langa Cleaning Company. So in this cleaning company, as an accountant, I'm going to record the transaction from very beginning until the end. So let's start. First of all, we need the chart of accounts. What is this chart of accounts? This chart of account is a list of account title that we are going to use during the process. We need this account title: cash, accounts receivable, prepaid insurance, prepaid rent, cleaning equipment, accumulated depreciation cleaning equipment, truck, accumulated depreciation truck, accounts payable, common stock, dividends, cleaning service revenue, salaries and wages, rent expense, fuel and oil, insurance expense, depreciation expense cleaning equipment, depreciation expense truck, income tax expense. So these are the list of accounts that we are going to use. As of now, you will not figure out what are the uses of this account, but later on you will realize what are the uses of these accounts. Okay, as of now, I just want to give you a brief background of these accounts. Okay, let's start with asset accounts. We have the group of accounts just like asset, liabilities, equity, revenue, and expense. So how many group of accounts we have? Asset, liabilities, equity, revenue, expense. We have 5 main group of accounts. Let's start with account title under asset. So under asset, we have cash, accounts receivable, prepaid insurance, prepaid rent, cleaning equipment, truck, and truck. Okay, what is cash? So just a brief description of cash. Cash is money. Cash in bank, which is the cash of the company in bank. Cash in cash box, or the cash on hand, or the cash of the company on hand, like the petty cash. You know, this petty cash reserved for small expenses. You have this cash reserved for small expenses. Cash in cash box, that's like company. For example, they have this cash box. You know, this box that is designed to handle cash. Like for example, they have sales. They temporarily put it in the cash box. Next, accounts receivable. Accounts receivable is an account title under asset that means receivable, from the word itself, receive, able to receive. It's just like I am entitled to receive. I have a claim. For example, you perform a service to a company. You are a cleaning company and you bill that particular company, meaning you have a receivable. You have an account receivable from that company. Next, prepaid insurance. Prepaid insurance meaning insurance that you paid in advance, meaning that means prepaid, you paid in advance. The insurance you paid in advance. Like for example, you paid your 1-year insurance in advance. So this is an asset account that includes your insurance that you paid in advance. Prepaid rent. From the word itself, prepaid, you paid your rent in advance. So this is an account title and under an asset that means your rent that you paid in advance. Next, truck. Truck means vehicle. This is your asset account, means that an asset account title under truck means this is the vehicle owned by the company. So asset accounts under assets are cash, accounts receivable, prepaid insurance, prepaid rent, cleaning equipment, and truck. So what are these assets? So small background of assets. Assets has a normal balance of debit, meaning once your asset increase, you put it in the debit side. And once your asset decrease, you will put it in the credit side. Now you will think, what is debit and credit? As we go through with our example, with our recording, I will explain to you what is debit and credit. Now we go to liabilities. Liabilities that we will be using is accounts payable. What is accounts payable? Accounts payable is your obligation to pay. You are obliged to pay. It's just like you acquire supplies on credit. You acquire supplies, you purchase supplies, but you did not pay on credit. Meaning, you have the obligation to pay in the future. Liabilities has a normal balance of credit. Normal balance of credit means once you create an entry, if it's liability, it increases in the credit side, and once your liability decreases, you have to put it in the debit side. Okay, again, liabilities is a group of account that has a normal balance of credit, meaning once the liabilities of the company that you are recording is increasing, you have to put the amount in the credit side. But once your liability decreases, or you pay your liability, meaning the liability of the company decreases, you have to put the amount in the debit side. Next, equity. Equity, accounts under equity are common stock and dividends. What is this common stock? The common stock is a capital that is invested by a common stockholder. Dividends is the account title that we're going to use when we are going to pay the stockholders for their share of the profit. Okay, equity is a group of account that has a normal balance of credit, meaning once our equity or capital increases, we have to put it in the credit side. Once our equity or capital decreases, we have to put it in the debit side. Next, we will proceed with the revenue account. Revenue account is account that includes the income or revenue. It has a normal balance of credit, meaning if it increases, you have to put the amount in the credit side, and if it decreases, you have to put the amount in the debit side. The example of the revenue here is the cleaning service revenue, because we are going to in our example, we are going to record the accounts of a cleaning company, so a revenue called cleaning service revenue. Now we have to proceed with expense. Expense is a group of account that includes all the expenses of the company. Expense has a normal balance of debit, meaning once your expenses increase, you have to put them in the debit side, and once your expenses decrease, you have to put it in the credit side. What are the account titles that we're going to use under expense account? Salaries and wages. Salaries meaning the salary of your employees, of Joji Langa company employees. Next, rent expense, the rent expense, the rent of the company. Insurance expense meaning the expenses related to insurance. Supplies expense, expenses related to supplies. Depreciation expense, cleaning equipment meaning the expense side of the asset, cleaning equipment. Depreciation expense, truck meaning the expense part of the asset truck. Later I will explain to you how to compute this depreciation. Income tax expense, the expenses related to income tax imposed by the government. Now, why I keep on saying normal balance debit credit? Because later on when we create the entry, we have only two options where to put the amount. One, the debit side and the credit side. So all those account that has a normal balance of debit, meaning once it increases, we have to put in debit side, and once it decreases, you have to put in the credit side. And once this account has a normal balance of credit, you have to put the account, once it increases, you have to put in the credit side. And then once it decreases, you have to put it in the debit side. Okay, let's start with accounting transaction of Joji Langa. The first transaction dated March 1st, 2020. This is your first transaction. Okay. On March 1st, 2020, Joji Langa invested 100,000 pesos cash and a multi-cab truck worth 121,000 pesos in exchange of its common stock. Okay, you have to understand that. Let's have a small discussion. What is the transaction about? Joji Langa is a common stockholder of the company. What she did was she invested to Joji Langa Cleaning Company an amount of 100,000 and a multi-cab truck worth 121,000 pesos. So as an accountant of Joji Langa Company, what entry I'm going to record? Maybe as a layman's, okay, you will just list, okay, I receive 100,000 pesos and I receive a multi-cab truck. But in accounting, we have an organized way on how to record it. First of all, we are going to record in the general journal. This is the book. This is our book that where we are going to record this transaction. Okay. This general journal, we call it Book of Original Entry because this is the first time we are recording the transaction. Going back to the transaction, what is the entry during the initial investment? Okay, first of all, let's have a little review. Let's have a little discussion on how to create the entry. On how the accountant create an entry in the general journal. What are the main important things to know? First, you have to make sure the date. This date will tell you when exactly the transaction happened. Second, the particulars of business transaction. The particulars of business transaction, which include the account titles and the explanation. Account titles that you are going to use and the small explanations. Brief explanation of the transaction. And then, what I'm telling a while ago is the column where you are going to put the amount. Okay, since Joji Langa invested 100,000 pesos and a multi-cab worth 121,000 pesos, this is the time that this two column is very important. You have to put a certain amount, the amount of the transaction in the debit side, and an equal amount of the transaction in the credit side. Make sure that the debit and the credit in every transaction is balanced. Now we are going to record on March 1st, date March 1st, 2020. Okay, we are going to debit cash 100,000 pesos and debit truck 121,000 pesos. We have to put the amount in the debit or in the left side. And then credit common stock 221,000 pesos. And our explanation, cash and truck investment from a common stockholder, Joji Langa. You will ask, okay, date, I don't have a question with the date. It's very understandable. But why I should put the cash in the debit side and truck in the debit side and common stock in a credit side? Okay, as I discussed a while ago, cash and truck is an asset. So imagine the company, Joji Langa company received a cash and a truck. So meaning the cash of the company increased by 100,000 and the truck of the company increased by 121,000. Once your asset increased, you have to put the amount in the debit side. Now you know already what is your debit side. You have to put also a corresponding amount in the credit side so that the transaction will be balanced. Just to indicate that this account is in the credit side, you have to put the indent. So as you can see in the picture, there is an indent to give an emphasis in the credit side. Okay, what account we're going to use in the credit side? So what is the reason behind that we receive this 100,000 and 121,000? Why I receive? I received this 121,000 and 100,000 cash because of the capital investment or equity investment by a common stockholder. Now we have to get account in equity called common stockholder and put the amount of 221,000. So your record, your entry as an account for this transaction, for this particular transaction is complete. Okay, my record shows that I have a received cash, my cash increased by 100,000, and then my asset truck is increased by 121,000, and then in the other side I have a capital increase. The capital of the company increased by 221,000. And also, of course, don't forget to put a brief explanation of the entry. Cash and truck investment from a common stockholder, Joji Langa. Maybe today you are hanging because everything is new to you, but you will get used to it. As an accountant, for me as an accountant, if I see this particular entry, because all the entries is just like recurring, just like again and again, the same entry and again. So you will think, what is the entry for initial investment from the stockholder? You will think, okay, the company received a cash and a corresponding debit from a cash or other asset account and corresponding credit in the capital. That is the entry. That is the entry for the initial investment. Next, let's proceed with the second transaction. The company purchased 30,000 pesos, 30,500 pesos of cleaning equipment on credit, meaning you did not pay. You have obligation to pay from Etong Singkit Cleaning Company. Now, because your business is a cleaning company, Joji Langa, the company Joji Langa company acquired 30,000 pesos worth of cleaning equipment. Now, what is the entry? The question, what is the entry during the acquisition of an asset called cleaning equipment? on credit. So you have to debit asset account called cleaning equipment 30,500, and then credit accounts payable 30,500. Okay, you will ask why you put the cleaning equipment in the debit side and you put the credit side accounts payable. Let's go back with the transaction. Let's analyze the transaction. The transaction is you acquired or you purchased cleaning equipment 30,500 on credit, meaning your cleaning equipment now increased by 30,500. So cleaning equipment is an asset. It's the company's asset, so you have to put it in the debit side, 30,500. Since you acquired the equipment on credit, you have the accounts payable. Since you acquired equipment without paying cash, or just like on credit, meaning you have the obligation to that company. You have the obligation to etong singkit company to pay in the future because of your acquisition of cleaning equipment. So accounts payable is an account, is a liability account that has a normal balance of credit. You increase your accounts payable, meaning since the normal balance is credit, you have to put the amount in the credit side. My brief explanation is acquired cleaning equipment on credit. Let's proceed with the third entry. The company purchased 3,500 pesos of cleaning supplies through cash from Hebron Kiosk Cleaning Supplies Company. So, Joji Langga Company acquired 3,500 peso supplies. You will think, what is the effect of this transaction to Joji Langga? Since you pay the supplies, you acquire the supplies on cash basis, the cash of the company decreases, and then there is equivalent, you receive the supplies. Let's go to the entry. Date, of course, March 1st, 2020. And then your debit side is an expense account. Supplies expense, 3,500. Why you put supplies expense in debit? Because supplies expense is an expense account. Once your expense account has a normal balance of debit, once your expense account increases, you have to put the amount in the debit side. Why the cash was put in the credit side? Again, cash is an asset. So the normal balance of an asset account is debit. Once your cash increases, you'll put the amount in the debit side. But once your cash decreases, you have to put the amount in the credit side. So this time, your cash account decreased because you pay 3,500 to Hebron Kiosk Cleaning Supplies Company in return of supplies. Let's proceed with the fourth transaction. The company hired 5 cleaners with 5,000 monthly salaries. So what is your entry? In this particular transaction, there is no financial effect to the company because you just hired cleaners as of now. What will be the financial effect in the future? The financial effect in the future is their salaries, their benefits related to the company. But as of now, we don't have any entry. We don't have any amount that will affect to the company that we are going to record because there is no financial effect. You just hired as of now. Maybe after 1 month, we are going to record entries for salaries related to these employees. And the fifth, transaction number 5. The company paid 1,000 pesos for fuel of truck. Now, Joji Langga Company paid. The cash decreased by 1,000. Why? Because they pay for the recharge of fuel of their truck. What is the entry? We are going to debit. Of course, date is there. Debit fuel and oil expense. Why? Because you spend fuel and oil expense, we put in the expense account, debit, your expense increases, so in the debit side. And then your cash decreases, so you have to put 1,000 in the credit side because expense again. I have to repeat it again and again so that you will absorb. Maybe if you are an accountant or you know already the rules of debit and credit, you will get annoyed, but as a fresher, you have to really repeat again and again so that you will understand. You will understand and remember the accounts. What are the effects of these accounts? How I'm going to put the amount in debit and credit. Now, fuel and oil is an expense account, so you have to put in the debit side because it increases. Expense account has a normal balance of debit, and once it increases, you have to put in debit side. And once it decreases, you have to put in the credit side. Cash is an asset account. Asset account has a normal balance of debit. Once it increases, you have to put in the debit side, but this time, the cash decrease. So you have to put the amount in the credit side. Debit and credit is balanced now in the entry. Let's go to transaction number 6. The company paid 3,000 pesos cash for its 1-year premium for property insurance. Now, the company, Joji Langa Company, paid 3,000 pesos cash for its 1-year premium. This insurance is good for 1 year for property insurance. So what is the entry? First, let's put the date. Debit prepaid insurance, 3,000 pesos. Credit cash, 3,000 pesos. Why? Why would debit prepaid insurance 3,000 instead of expense automatically? Because this insurance is prepaid. You paid in advance. 3,000 and then cash 3,000. Why I put it in the prepaid insurance in debit side? Because prepaid insurance is an asset account. Again, the normal balance of asset is debit. And once the asset increases, you have to put the amount in the debit column in the left side. And once it decreases, you have to put in the credit side column in the right side. Cash decrease. Cash is an asset, so you have to put in the credit side. Transaction number 7. On March 16, 2020, the company paid 15,000 pesos cash for 3 months rent. From March 1st, 2020 to June 30th, 2020. Now, you paid your rent 3 months in advance. What entry you are going to record? First, put the date, March 16, 2020. Debit, prepaid rent. Prepaid rent is an asset account, so it increases by 15,000. You have to put in the debit column. You have to credit cash. Credit cash, 15,000 pesos. Why? Because your cash decreased. Your cash is an asset account. And your explanation, paid 3 months rent in advance. Transaction number 8. On March 17, 2020, the company billed Ayan's Easy Leasing 25,000 pesos for cleaning services performed. You billed a client because you perform a service to them. So you perform service to Ayan's Easy Cleaning 25,000. What will be your entry? Debit. Okay, put the date, March 17, 2020. You have to debit accounts receivable. Why accounts receivable instead of cash? Because you did not collect yet. You just bill them. You just perform the service and bill them. So you have accounts receivable. Accounts receivable is an asset account. You have to put in the debit side because it increases. And then you have to record a revenue. Why you have to record the revenue? Because you have an income. Because you perform service to them. Cleaning service revenue, debit. A credit, 25,000. Why you put the cleaning service revenue on the credit side? Because it increases. Imagine, your revenue increases. Why you put the cleaning service revenue in credit? Why not in debit? Because cleaning service revenue is a revenue account. From the account title itself is a revenue account. Revenue account has a normal balance of credit. Once it increases, you have to put the amount. It increased in the debit side, in the credit side. In the credit side. Once it decreases, once your revenue decrease, you have to put the amount in the debit side. What is my brief explanation? Revenue earned for services rendered or performed. Transaction number 9. On March 31st, 2020, the company received 30,000 cash from Avid's Dance Studio company for cleaning services performed. So the story is you received 30,000 pesos cash. Why? Because of your services performed to Avid's Dance Studio company. What is the entry? First date, March 31st, 2020. You are going to debit cash 30,000 pesos. Why? Because the cash of the company increased by 30,000 pesos. You are going to credit cleaning service revenue. Why? Because your revenue increased by 30,000 pesos. Again, your cash increases. The cash is an asset account. Asset has a normal balance of debit. Once your asset account increases, you have to put in debit side. And then once your asset account decreases, you have to put in the credit side. Cleaning service revenue is a revenue account. The normal balance of revenue account is credit. Once your revenue increases, you have to put the amount it increased in the credit side. Once your revenue decrease, you have to put the amount in the debit side. Now, as I tell you again and again the rules of the debit and credit with accounts, you will somehow remember. You will somehow remember, or if you will not get dizzy of what I'm doing, you will somehow remember the rules of the debit and credit in every account. Let's proceed with transaction number 10. The company paid 25,000 pesos for employee salaries for the month of March 2020. Now, during the hiring, we don't have entries because there is no financial effect. But this time, during their salary payment, there is a financial effect. What is the financial effect? What is the financial effect of paying the salaries of employees? Of course, your cash decrease and then your expense increase. So debit salaries and wages expense, credit cash. The brief explanation is salary payment for March 2020. Transaction number 11. On March 31st, 2020, the company paid 2,500 pesos for an income tax. So imagine the company paid to the government an income tax worth 2,500 pesos. So you will analyze this transaction effect or financial by it increases our expense and it decreases our cash. So your entry will be date March 31st, 2020, debit income tax expense 2,500 and then credit cash 2,500. Our transaction number 12. Transaction number 12, the company paid 2,000 cash for dividends of the common stockholders. What is the entry of paying dividends to common stockholders? So your entry will be date March 31st, 2020, debit dividends 2,000 and credit cash 2,000. So once your dividend increase, you have to put the amount in the debit side because it's the normal balance of this account is debit, and then a corresponding credit to cash. Maybe you will not ask now why you have to put the cash in credit because it decreases. I already explained in the previous transaction why once the cash increase, why the cash decrease, you have to put in the credit side. So this transaction credit cash 2,000.